And we're back with another episode of Franchise My Business, podcast for franchisors, hosted by franchisors. I'm your host, Kevin Oldham, and we're going to talk about funding your franchise. We're going to talk about it from the Zor perspective first, and then we'll talk about Z's. I think the Zor perspective is actually pretty simple. So a lot of, you're basically faced with the choice. Do you self-fund? Or do you bring on investment dollars? I mean, going and getting a loan from a bank right away is also an option. So really, there's kind of three places. Are you going to self-fund? Are you going to bootstrap? And if so, it's probably going to put some constraints on your growth trajectory, but it also means that you call the shots and you don't have to fulfill debt service or answer to anybody as if you were to take on an investor. If you go to a bank, my gut tells me you're going to have an established relationship or just a really good business plan to get that financing from a traditional bank. We know that interest rates are higher. Lending's been tightened a little bit. It's still a viable option, but you've got to probably just make sure that you've already got that existing relationship. So you may go with your existing banking partner to look at that. And then another popular thing is to look at investment. You can do a friends and family round, let people in. You could do a seed round. There's all sorts of ways that you could also partner with. Some of these holding companies are looking to make investments. There's little VCs that are popping up and funds that are taking on emerging franchisors. But really what I want to speak to is I want to talk about the franchisees. So when we're talking about funding your franchise, there is a whole bunch of ways that you can do it. When I say fund your franchise, basically I'm saying fund your new business because the franchisor is already in business. The franchisor already has their prototype rocking. Chances are they've already got like a proven awesome business and they're just looking at adding another business on top of that to support the expansion via franchising. And a lot of those folks will make that decision well ahead of time to figure out the financing and typically fund it from their existing operations. But when you're thinking about buying a franchise, it's quite a bit different because then you're, maybe somebody who's just like left a job or something like that, and you're thinking about buying a business or starting a business. SBA is a phenomenal opportunity to obtain those types of funds. We work with a local bank here and have worked to get our franchise system as an SBA approved type of franchise system. The 7A loans are great for franchise purposes. I always have to look over here at the difference between the two. There's also another SBA mechanism, CDC/504 loan that you can do for like real estate if there's real estate or equipment that needs to be financed with the franchise. Friends and family are another way. Make sure that you love your friends and family. Try to stay away from that. You can also go get short-term loans. I would not recommend it, but if you're working with a franchise system and you just feel like you need a 12 to 18 or 24 month ramp for some operating capital, maybe to pad your pockets for the unforeseen types of expenses, there's no shortage of places where you can go based on your short-term credit or based on your personal credit to get like short-term capital. The other ways that people will get there is they may actually work with their franchisor and have some sort of financing mechanisms in place. And those financing mechanisms, sometimes will apply to the initial franchise fee. We've done that in certain occasions where that's been something that we've offered for somebody that was really, really appealing. We wanted them in, and maybe they didn't have all that upfront capital, but we believed in them, so we worked with them on a plan. But I would definitely make that the extenuating circumstance and not the norm. The number one thing that if you're coming in and you don't have the funds for your initial franchise fee, chances are you're undercapitalized. You don't have the funds that it's going to need to have to weather the storm when business inevitably does things that are unexpected. So those are just some of the things that you should think about. If I had to pick one, first of all, I'd say it really depends on the circumstances that you're in, and everybody's circumstances are different. But going and raising funds from, family and friends, try not to do that if at all possible. I would look at the self-funding mechanism, even if it means go slower. That's what we've done with our suite of smoothie shops. We really enjoy it. We enjoy having control. We enjoy being able to do the things that we want to do on a daily basis and move at our own pace without that pressure to grow to basically pay back the invested capital in the business. Because as soon as you take on capital, whether it is an investment, so if it's an investment, they're going to want that capital back plus more. If it's, bank loan, then you're going to have some sort of fixed term. Chances are you will not have a fixed interest rate. So it's another thing you need to take into account, is that a lot of these interest rates may be variable, particularly if you do something like a home equity line of credit to buy a business. Raising my hand now, if you're watching video, I've done that as well. And I'm thankful that today I don't have anything on my home equity line of credit, because the expense for the interest expense would have crept up quite a bit in the past couple of months, in the past year. So there you go. There's, if you want to get into business, there's capital generally available. You just may have to get innovative. But don't let that be a barrier. Don't let capital be a barrier to you pursuing what it is that you want to obtain in life. Now, it may be that you can't do it today. It may be just, hey, you go and inquire about a franchise, and maybe your net worth number isn't where they need it to be, and your investable capital number, your liquidity number isn't where you need it to be. Well, that's cool. At least you know that, and then you can work towards having those minimum requirements set and be in a good position, and frankly, a more healthy financial position for the future. Us franchisors, we don't throw those numbers on there just arbitrarily. Like we have seen franchisees be successful and not successful, and we put those hurdles up there to increase the likelihood of success. The minimum net worth, the minimum liquidity, the total investable capital. Those are all super important things that, much like your mortgage or anything else that you're investing in, you don't want to overextend yourself as a consumer or as the business builder. So there you go. Until next time, I'm your host, Kevin Oldham. I hope that you have a phenomenal week and be well.